Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM with your top 3 market points of the week. Now, we had some earnings this week and we had some policy changes. So without further ado, let's just dive right in. At point number 3, it was the Fed cutting interest rates by 25 basis points. However, this was not a unanimous decision. There's 3 dissenting votes on whether to keep rates the same, potentially cut more, or cut the 25 basis points. Now, this is probably one of the more divisive decisions that the Fed has seen in recent years, as there continues to be some debates as to what's the most pressing threat. Is it inflation or is it employment data? Now, Chairman Powell, when he was pressed as to if the next step is going to be another cut at the upcoming meeting, he was hesitant to confirm that and pretty much says that that's not the base case. So they're going to, as always, take it data by data and meeting by meeting. At point number 2 is Eli Lilly releasing the results of their latest experimental weight loss drug. Now, this drug was said to have allowed participants in the study to lose 23% of their body weight in roughly 68 weeks. They were losing so much weight, some of the participants in the trial quit the trial entirely. Now, the point of this study was to diagnose pain threshold and weight loss in regards to knee osteoarthritis, which is a condition heavily linked to obesity. Now, this would make this experimental drug the probably most potent weight loss drug yet released, as we've continued to see over the last year or two just how potent these GLP-1s and these other weight loss medications are. So huge results for Eli Lilly on that market. And finally, point number 1, it was Oracle releasing earnings. So Oracle released their quarterly earnings and they missed on revenue expectations. But the big thing that got it hurt, as we've seen Oracle falling close to 11% in just one day yesterday, is because they've heavily increased their CapEx spending from up to around $50 billion expected just next year alone. And they had their CapEx of the recent quarter reach up to $12 billion. Now, you compare this with also them missing on their revenue estimates that the analysts wanted to see, and it's just a bad picture all around. Because that now brings into question is all of this heavy debt-laden CapEx that they are building out for these data centers with their OpenAI deal that's going forward. As you recall, they had a massive run-up in their stock price just a few months ago. Now it's coming to roost as to can they convert this CapEx spending into tangible revenue? And right now the street is pretty much hammering them very hard on this recent earnings result, as they are not convinced that it's doing so. Now, that does it for your top 3 points this week. What are we checking out for next week? Well, next week, we're hopeful that we're finally going to be getting some non-farm payroll data to get some more clarity on the labor market, because we have been in that government shutdown. So we'll be finally tuned into that next week and keep you posted on here. Now, that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor. And if you do not have one, please follow our link below and we'll happily get you connected with somebody. But as always, please go out, enjoy your weekend, and we will see you the same time next week. Thanks again.